watching CNBC-TV18.
Hi guys, good afternoon and welcome to CNBC-TV18's Mumbai newsroom. I'm Pavitra Parekh. You're tuned into Mutual Fund Corner, and today we're going to discuss all about solution-oriented funds. These are, simply put, illiquid funds with a lock-in period of 5 years, and accordingly, these funds are suitable for investors who do have a longer time horizon and they're looking to invest for the long term. With a specific objective in mind. So, for instance, if you're planning your child's education or you're planning your own retirement, these funds could, be helpful in that situation, and it would be useful to help pick a solution-oriented fund as well. Another positive is that investors also enjoy some tax-saving benefits when you're getting into these funds. So, to discuss all of this, who is really best suited for, how these funds are constructed, we're joined by Vineet Nanda, who's Managing Director at Sift Capital on this show now. Vineet, thanks a lot for taking out the time and speaking to us today on this topic. This is not something that we've discussed very often, but like I said, since you are parking money for a longer term, since you have a fixed sort of objective over here, it is something that could work well for a lot of people as well. So we will get to the objective, when you should get in, all of that. But first up, if for the sake of our viewers, you could just explain how these funds are created. What is the construct of a solution-oriented fund?
Thanks, Pavitra, for having me on the show, and good afternoon to everyone. Solution-oriented mutual fund is one of the core categories which are as per the SEBI classification, which are essentially customized to meet specific financial goals which the clients may have. In India, as of now, we have broadly funds which are in the children saving category and retirement category. So basically, the children savings funds can be looked at for the child's marriage, or they can be looked at for child's education, whereas the retirement funds are basically to take care of your regular income requirements once you superannuate from your job, or once from your business you decide to take it easy and live a more passive lifestyle. So these funds basically come with a 5-year lock-in because these are essentially long-term savings vehicle. In the case of the child plan, the lock-in is 5 years, or when the child turns 18 years of age, whichever is earlier. For the retirement funds, the lock-in is 5 years or 60 years of age, whichever is earlier. Also, the reason why these are called solution-oriented are because not only are they aiming towards a specific financial goal, but they're also customized to take into consideration the risk profile and the volatility appetite of the customer. Hence, these plans essentially come across various risk profile. So you have pure equity funds, you have pure debt funds, and then you also have hybrid funds, which again, within hybrid, you want a predominantly equity-oriented fund, or you want a predominantly debt-oriented fund. Both options are available. So therefore, the solution-oriented funds facilitate investment for preservation of capital or for appreciation of the capital, depending upon what the client's risk profile is. Also, additionally, these funds can be invested in both via lump sum mode and SIP mode. So therefore, it helps in creating a financial discipline of investing on a regular basis towards achieving some of these long-term goals that the clients have.
All right, got that. So that is on the construct of these kinds of funds. But Vineet, one question that we get a lot is that why should someone pick a solution-oriented fund over a regular large cap fund, mid cap fund, even a passive fund? Because if you've decided that you're going to park away money for 5 years and you do that in any of these categories, they're saying that why is that not an option? So is it just that there's perhaps more discipline when there is a lock-in in place?
Well, see, my experience has been that a lot of customers, when they start their journey, they start, even at a young age, thinking that, yes, they have a long-term horizon, they have a high-risk profile. But when volatility actually, hits your portfolio and you see negativity, then people start to get nervous. So the advantage of solution-oriented funds is A, for first-time investors who don't have advice available and who don't know which open-ended fund, whether equity or hybrid to choose. So for them, at least there is a customized solution available, which will ensure that not only they pick up a fund which is in tune with the debt equity mix that they're comfortable with, but the lock-in ensures that short-term fluctuations don't lead to then taking action which will harm the achievement of the long-term goals per se.
Yeah.
Second is that human beings are emotional, and even if there is an exigency, experience says that people are more aligned towards redeeming open-ended funds rather than funds which are for specific goals. So what that does is that, as you all understand, that investments in the long term create wealth, but the short-term volatility is basically what we need to be able to ride over. And for people who don't have self-discipline or who don't have good advice available, for them, these funds provide a customized solution to be able to ride over short-term volatility to ensure that their goals are comfortably met.
Oh, that makes complete sense. And it would be silly, right, to assume that you are so good at, navigating the markets that perhaps volatility is not going to shake you, especially for people who are perhaps newer in this space. So that point is definitely well taken. But, Vineet, take us through what you see as the key advantages as well as limitations of solution-oriented funds. I mean, I know we spoke about financial planning, which is, of course, a big one. There's limited risk. Those would be the advantages. But also take us through if you feel like there are some limitations here.
Sure. So the advantage is, as I mentioned, that this forced discipline essentially in a quirky way limits your risks, because you are not going to be taking knee-jerk actions based on market volatility in the short term. And that is an advantage which is there. B, these funds are largely passively managed, and because they're passively managed, hence, therefore, they are able to give you returns which are in line with the index returns without causing too much of error from a fund manager perspective per se. The limitation is that these are close-ended funds. Close-ended funds means that there are no, it's not like you can pay an exit load and take out money. Once you invest the money has a 5-year lock-in, and therefore you have limited liquidity. So therefore, you have to be prepared that once you are investing money, you need to basically, ensure that the money is invested till the financial goal is achieved.
Okay, got that. So that is important, to note for everyone who's looking at a solution-oriented fund. Vineet, who do you think should consider these funds? Is it anyone who's a first-time investor who doesn't have too much experience in the markets? Is that one? And also, do you think that everybody should have a solution-oriented fund? Because a lot of these things, like retirement planning, for instance, is something that a lot of people would want to do, right? Does that automatically mean that they should look at solution-oriented funds?
See, I think it is not necessary that everyone should have a solution-oriented fund. As I mentioned earlier, that for people who don't have advice available, and to that extent they are making their own investment decisions, and who are very clear about certain financial goals they have, they can opt for the solution-oriented funds. B, for people who are able to not decide on what is the kind of asset allocation that they are comfortable with, or who basically need someone to be able to customize a solution for them without they taking decisions which could probably not be in line with the volatility they are comfortable with, can opt for these solutions. So basically, open-ended funds will be able to achieve the same objective, potentially even generate superior returns because of the more active management. But at least these funds will ensure that you do not make mistakes in the process of selection of funds, and therefore at least you don't fall short of the financial goals that you are planning to achieve.
All right, that point is completely well taken, and we understand. So for someone who's maybe too new in the markets or needs that kind of discipline, it would make sense, but it's not necessary that, this is a good fit for every single person, or, they need to look at a solution-oriented fund. Vineet, it's been a very helpful chat, but I request you to please stay on. We have to take a mandatory break, but we'll be back in just 2 minutes to take a lot more questions on this topic of solution-oriented funds. Welcome back. You're still tuned into Mutual Fund Corner here on CNBC-TV18, and we still have with us Vineet Nanda of Sift Capital to take a lot of questions on solution-oriented funds. Vineet, we've spoken about a bunch of topics, but something that I want to know is, when should you start investing in a solution-oriented fund? For investment in general, we say that the sooner you start, the better. But if you have a specific goal of retirement planning, children's planning, is that the same advice that you would give?
See, if you look at the life cycle of an investor, the largest financial goals are essentially around the children's education, marriage, purchase of a house, and retirement. And these are goals for which you need to invest over a period of 10, 20 years to be able to create a corpus which not only ensures that these goals are met, but your journey towards the goals ahead also continues. So essentially, because that these are large quantum goals, it's important that the earlier you start, the better it is. To your question, yes, from an investment perspective, the earlier you start, the faster you can achieve these goals, and the faster then you can start working towards your next goals. So starting early helps. And also we have to remember that because different investors have different risk profile, so therefore different investors would also need different time horizon to be able to achieve their goals. So starting early only makes it easier for you and more comfortable for you.
I mean, there's nothing bad that can come out of starting early, right? So I guess that's good advice to give anybody. But
Einstein said that, compounding is the eighth wonder of the world. So starting early will always help you.
Oh, absolutely. And we talk about this eighth wonder of the world very often on this show. So I take that advice completely. But Vineet, so many fund houses offer solution-oriented plans, right? You could literally go to any AMC and pick. So how do you compare and pick one over another?
Sure. So I think first step is that we need to sort out the funds based on what is the financial goal that we are investing for. As I mentioned, as of now, we have solutions available for child and for retirement. And obviously both have different time horizons which are available from the time you start investing till the time you actually need the money. Second is that once you've decided the core category or the core goal for which you want to save, then you have to figure out what is the kind of journey that you want to have to that goal. And by journey, what I mean is that, do you want a predominantly more equity-based journey, which will, over a longer period of time, create greater wealth, but will come with more volatility? Or do you want to have a more moderate journey, where you are more hybrid-oriented, with lesser volatility? Or you want to be more conservative, where broadly you want to beat inflation, but work more towards wealth preservation? So therefore, first step is defining the goal. Second step is basically defining the asset allocation that you are comfortable with. And then you look at, the funds based on who is the fund manager and what is the track record of the fund to be able to allocate, your money. And again, even for a goal, you can obviously create a bouquet of investing across, 2 or 3 funds so that you are able to diversify.
Okay, so now that we have taught investors how to go about picking the correct solution-oriented fund for them, do you want to quickly run us through what the taxation of these funds is as well? We normally, help our viewers understand that aspect as well.
Yes. Some of the older retirement savings fund do provide also the ATC benefit. So for people who are looking for that as an additional benefit, that is available with some of the retirement plans. From a taxation perspective, taxation will be a function of the asset allocation of the fund that you pick. So if you were to start, let's say, from a pure equity fund will have equity taxation, which means that up to 1 year, you will have, anyway, you can't look at 1 year because minimum 5 years is there. So up to 1 lakh rupees per year, there is no tax. Beyond that, it is 10%. For funds which are predominantly equity based in the hybrid category, which means that they have minimum 65% equity allocation, again, your taxation will be equity oriented, which is 10% long-term capital gains tax. For funds which are pure debt or which have less than 65% equity and therefore are hybrid funds with debt orientation, you'll be eligible for inflation indexation benefit, and post-inflation indexation, your taxation will be 20%.
Okay, got that. So that is on the taxation of these funds. But with that, Vineet, we're going to wind down on this special. But thank you so much for joining us and taking us through this complete explainer on solution-oriented funds. I hope that helps our viewers as well. You know, for anyone who's looking and has a specific objective in mind, these are some of the options that you have. And we just took you through what the construct of these funds is, what the benefits are, what the limitations are, and of course, how you can go about picking it as well. So thank you for joining us on this Mutual Fund Corner special. You stay tuned because after this short break, we're going to have closing bell to take you through the final hour of trade.